Good morning, traders. It is 8 a.m. Chicago time on the 8th of December, 2021. It is Wednesday on what is a cold winter morning here in Chicago. Thanks for joining me. This is episode number 2131. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So, yesterday worked out to perfection almost. Not that I'm tooting my horn, but it's not very common. So it's interesting. A lot of times, with this in this process of doing homework that I've been sharing with you here for the last, I don't know how long it's been, 8 years, 7 years, something like that. 2,131 episodes. Um, During this process, we look to create a plan, and um, and and we don't expect that plan to hit bottom and top exactly, but it does give us a good way to hang on to trades when we take them. So the market continues to hold these higher prices. In fact, the market this morning, the S&P this morning closed its SOC from the Omicron news that occurred on, let me pull up my levels sheet to tell you, the 26th of November. That was the day after Thanksgiving. That short Friday, we opened up at 4707.75. With the Omicron news, we opened and we had an open drive down that morning and sold off pretty strong, setting off a sell-off all the way down into the 4400s. And this morning, we came back and we touched that 4708 area. In fact, we put in a high at 4712 in the S&P this morning. The S&P is up 15 basis points, but actually was up a lot more earlier, a bit more earlier. The NASDAQ has given up a lot of its gains. The NASDAQ actually put in a high of 16,436, so about 100 points higher, and is coming back to settlement now. The strongest today is the Russell. The Russell really jumped on that, jumped higher and hasn't really given up all that much on the news this morning. The news this morning was that Pfizer's vaccine with boosters is showing about a 40% capability of disabling the Omicron virus. So it shows only partial protection against the Omicron virus, and the market responded to that quite dramatically. If you look at crude oil, it had a whipsaw move. The indices pushed down. There was a little bit of volatility that came out at about 5:45 a.m. this morning, and so on. So that's the big news. Other than that, it is mainly quiet overnight, as it says there on the sheet in terms of key events. The U.S. debt limit was increased by the House in a pretty convoluted deal to make everyone happy, and that's where we are today. So it's a digestion morning. It's not a rally morning. We already had our rally, and now we're digesting, and we are very close to all-time highs currently. What we have pre-open in terms of pre-market earnings, relatively smaller companies, 2 billion or so: United Natural Foods, Thor, and Campbell Soup. After the close, we have GameStop, which is one of those meme stocks or Wall Street bet stocks, and Grafe. Today, we get the U.S. JOLTS job openings number, which is actually used to be a minor number. A 1-star number is now a 3-star number. It is an important figure. Actually, it should have been highlighted on the sheet. The JOLTS job openings reports on jobs that are open, that have been open for a long period of time and unfilled. These numbers are at record highs. Today we get crude oil inventories out of the EIA. We got API yesterday after the close. 10-year note auction at 1 o'clock. And then some important numbers out of China, the year-on-year, month-on-month inflation numbers out of China. Those who are trading the Asian session will want to pay attention to that. Looking over to the S&P, I want to remind you that tomorrow is the official roll to March 2022 in all U.S. indices. So NASDAQ, Russell, S&P, Dow, mid caps, what have you. They roll tomorrow if officially. I normally roll with the official roll, but lately the markets have been so thin, it has not provided for a reasonable trade to do so. So what I'm doing is I'm trading the old contract, which in this case would be the December contract that we're on currently. I'm going to carry that forward through the end of Friday, and then redo the levels, accounting for the premium difference between the contracts, which occurs tonight, whatever that premium difference is, and adjust everything. And so all the levels on Monday will be trading and referencing the March contract. Friday is generally, we discuss this, and thanks to Tendex Capital, who's a head trader at Convergent Trading. We discussed this in yesterday's member AMA session at Convergent Trading. You know, to him, he generally doesn't trade Friday. He doesn't trade Monday. I agree that Friday is one of the worst days to trade. The second full day of rollover plus options expiration. Friday is one of those days where a lot of traders will regret having engaged with the market. By Monday, we'll have a lot of roll activity. By Wednesday, the roll will be pretty much done and things are likely to be back to normal. I want to remind you again that starting now, the delta and your order flow volumes are going to be impacted by the roll. The roll will, a lot of institutions will start rolling their contracts forward. So you'll see higher and higher volume in the March contract already. And it'll be the worst. It's going to be on Friday, Monday, and it starts to ease off Tuesday. And then by Wednesday, we're back to normal. We still have the impact of expiration next Friday, the 17th. So just word to the wise, if you're new to futures, this is a very important characteristic of futures to understand the role and how it impacts trading. The S&P this morning, mainly balanced, 253,000 contracts traded, and the overnight inventory is 91% long, meaning 91% of the volume traded above the settlement price, yesterday's settlement price. So a very long position market, likely to drop back into settlement. I expect a touch of settlement this morning to satisfy that statistic. And the range has compressed, although it is wider than what is common, which is 23.5 points. Our range this morning is 30.75 points. Our point of control is right there at the century figure of 46.99. The century's 4,700. This is likely to be a relatively noisy open. So just account for the fact that it is this way, and it is very likely to impact how we trade. I'm going to show you what was expected yesterday really quickly. This is a tweet I posted, which is available to you to look at. Let's minimize this. Yesterday, the primary scenarios discussed, as I narrated, is choppy open and then immediately push to 46.7350, which is the first key target, the main target of yesterday, which is the MC point of control, bringing the market back to its balance at 73.50. And then beyond there, it is likely to push to 46.90 before it starts to chop in the afternoon and roll over. Okay. So again, I don't want to spend very much time walking through the market in our review segment, but this is what happened yesterday. Let's switch to a 4-tick Renko as we normally have. I'm trading with PNF now. So that's what we had. We had a bit of an open auction that pushed, pulled, and then immediately squeezed right into the 73.50, pushed back, pushed, pulled back, and then really took off into the 90. Here's the 90 right here. Took off into the 90, consolidated, and then we rolled over into the close. This freak show right here was just a mess. That was a very expensive short into the close. The market rolled over, fell below the RTH VWAP, and fell below the RTH mid full session VWAP. And so I looked for a short into the close, looking for it to correct a little bit. And what it did is it just squeezed, and there were bids in the book for about 1,200 to 1,700 contracts, just sweeping, 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 sweeping. I took a stop loss on that. That wasn't fun. It looked like a pretty solid setup there to catch a lot of the thin structure. The trade to get short is the fact that we fell below the P or the balance, and the expectation is this weak structure is likely to squeeze us down towards the overnight high at 46.56 at least, and it just squeezed right back up and finished right at 46.85, which is the settlement price. Did not enjoy that at all. It's just trading the close has its goods, but it's also got its bads. It's a tough trade. The open is a lot easier to trade than the close, in my opinion. Here's what's happened since. We have immediately pushed higher. We continue to squeeze higher, pull back, and then we've consolidated. We've popped, and we've dropped, and that's the volatility we saw on the Omicron news there. So that's where we are. Looking at the big picture, we have a very, and I narrated this, the expectation. We talked about how it was rounding off, and this is very likely to squeeze back into 46.73.50, 46.90, and then 47.07.75 is the Omicron high, and then new all-time highs are now on deck. So I expect the market to want to pull back to the high volume node at the 73.50. Currently it's trading at 46.89. It's looking quite strong. We left a pretty big gap beneath us, which is what we would consider to be weakish structure. Areas that have not been tested remain weak. Imagine being long above yesterday's low somewhere, holding for a swing, and then watching the market take that low out. In general, that causes people to get skittish and drop out, and so we consider that weak structure. Pretty good volatility, pretty good range, but today please be aware that we are likely to slow down into this Friday roll and expiration. Looking at what we have in terms of across the board, you could see really good separation on the indices, the NASDAQ being the weakish one, but it did a lot of catching up yesterday, and the Russell being the weakest, the Russell being pretty whippy, but the Russell's stocks are most likely to be impacted dramatically by any COVID related news. So the Russell's likely to respond much more aggressively to the downside or the upside on anything that's related to COVID, as it represents smaller companies which really get impacted when that happens. Bigger companies can weather the storm. Gold is really tracking its VWAP, its monthly VWAP. Silver is relatively weak, and as we push higher on these indices, you note that the bonds and the 10 years are pulling back. As these things were pushing down, you notice that these things are pushing up. So money is flowing from there to there. Basically, it's flowing into the indices and vice versa. As far as crude Crude is expected to continue to push. I forget what the level was. I believe it was 74, 75 to 75 even is the next test swing. We got pretty close here this morning. Crude got to whatever, 73 or something. But the expectation is we are likely to push right into here before crude oil decides what it wants to do next, if it wants to get back into balance up top, or if it rejects it and returns back to its more balanced price down in the 63 area. 63 is what we'd recently tested. Natural gas, same thing, gapping down, trying to turn up, but natural gas is very weak currently. Let's take a look at what's expected for today. And I want to remind you again, there's been very little participation in this fundraiser for St. Jude, the end of year fundraiser for St. Jude. The Edge Clear will be contributing 100% of its commissions for the month of December for all accounts trading that have opened or funded for the first time in the month of December. You can support this by doing that so that any and all revenue that's generated by your trades would go to St. Jude to support children with cancer, or you can go to myedge or myed.ge/St. Jude and contribute directly. Anything is worth something to this St. Jude's Cancer Research Center. So $3, skip your coffee or buy an additional coffee, contribute $3, $10, $20, $50, whatever. Make a small contribution. We did another one with Convergent Trading where we raised $10,000 back in October. And I think that traders are generous in general, and I'm asking you to contribute. Okay, so this is squished a bit much. So this morning, really expecting chop, expecting us to come back to the settlement price here at 86 and a quarter, looking for chop, looking for it to make an attempt lower, looking for the overnight point of control to be closed, and then looking for it to test higher, but really expecting this to be a creepy, crawly day, not expecting too much in terms of participation. The high, probably 28.50 is the next key area up. 28.50. The all-time high is 47.40.50. But I'm not really, I don't have high expectations for range today. I'm expecting this to be, unless we get driven by news, I'm expecting this to be a relatively muted day. But I do expect a higher high, higher low versus the prior session, which has a P shape. The secondary is an open that tests the overnight point of control, comes back down and fills in some of this thin structure, and could push us to, what is that level? Could push us down to what I talked about earlier, 56 or so before the bounce. Still a higher high, higher low, but a weakish performance overall. I'm going to keep my hands off the keyboard or the mouse for the first 20 minutes today unless something spectacular shows up. Not going to trade it. It's likely to be very choppy. Look at the overnight profile. Most of the range is covered by the one move this morning, and otherwise you have VWAP, the full session VWAP, full session mid, and the overnight point of control all on top of each other in what is a completely balanced profile on top of yesterday's P balance. And to me, that's just a quite a noisy area. There is no edge here, clear edge on the open. So it could pull back and test yesterday's structure, could squeeze higher, but I expect slower participation, especially coming into tomorrow's roll. Good luck, and I'll catch you tomorrow morning. Take care.